Good morning and welcome to this month's Oakcrest Insight. One of the reasons I started these Insight videos was to keep you updated on timely topics. So one of those topics on everyone's mind right now is, Ryan, how safe is our current banking system? I just got back from a meeting for 3 days with my study group, peers in our industry, experts, and I wanted to pass along the information we discussed in those meetings. So whatever news channel you turn on over the last few weeks, the banking system is one of the headlines discussed. And so today, hopefully, I can put some clarity on what has happened and what we've heard from our industry experts versus just what the media is telling us on the news. So first, let's talk about SVB, or Silicon Valley Bank, as I'm sure you've heard about first on the news. Now, let's give a little background. So what happened was they courted venture capitalists, and really specific to California, as depositors. They had about $200 billion in assets, and they thought it would be a good idea to take those assets and invest those in long-duration treasuries and mortgage-backed securities. Now, when interest rates rose this past year, those assets lost money. But they didn't have to declare this on the balance sheet, as the plan was to hold them to maturity and get the full value of their investment back. However, things changed though, with social media helping all these depositors pretty much coming together and saying, hey, we're going to cause a run on the bank. We're going to tell them we want our money now. So the run on the bank caused somewhere in the neighborhood of 20, 25%, 30% in that range of the deposits to come out of that bank in a couple days. That basically forced SVB into insolvency, forcing the Federal Reserve to step in and pretty much take over the bank. So the bank probably would still be solvent today if there wasn't a run on the bank, as they wouldn't have to liquidate all of those investments at a loss like they did. Now then, we get to the next one, Credit Suisse. Credit Suisse has been having financial concerns, and investors are not willing to give them more money to help with that. So there's a concern that they're insolvent based on assets and liabilities to the bank. The question then is, are these two incidents isolated incidents, or are they somewhat something to be more concerned about? So if you look at the stress tests going on within our U.S. banking system, the larger banks, they're well prepared, they're very well capitalized to deal with any of these market hiccups, such as JP Morgan, Bank of America, Morgan Stanley, the names that you know, right, and recognize. They don't have the same problems we've been told that SVB did. They are much better capitalized and much better managed. So that being said, though, in regards to the European banks, many of them didn't have to go through this same process and stress tests like we did here in the US, and some of them might be at risk. And so the question is, what does the bailout for them look like? So obviously it's creating a lot of angst in the marketplace, and that uncertainty or angst makes it much worse. So with our meetings with managers and economists the past few weeks, we have been reinforced by them that the strength of the American banking system should not be systemic across the board. The other day, Janet Yellen, also head of the Treasury, reassured us of this as well in her speech. So this is something we haven't taken lightly though, okay? We've been reviewing a lot of our client accounts to see if they could be affected by this. But we're also monitoring this situation if it changes based off what I'm telling you today. So the summary with all of this is that the Federal Reserve came out immediately to cover the FDIC limits for the depositors, and we don't feel this is a big enough issue to make an impact on our national economy. However, we will know more in the next week as the Federal Reserve meets to discuss interest rates going forward and to hopefully now start pausing raising rates based off what's happened here. They are in a blackout period before meetings. What that means is they can't come out to address banking system concerns today over the past few weeks that we would immediately like to be reassured on from them. So we're hopeful they're able to reassure us next week that this shouldn't be a systemic issue and really kind of reassure us of what their plan is going forward. So as I mentioned, we're going to keep you updated if things change more on this. I hope this was helpful, put some clarity around the situation for you, and feel free to call us to discuss this more, as these are conversations I'm having multiple times a day with clients on. We look forward to seeing you next month on Oak Crest Insight.